Hi there, investorholics and friends and the casual viewers. Welcome to another ETF Spotlight review. Today we'll be looking at MVB, which is the VanEck Vectors Australian Banks ETF. This ETF might be of interest if you have a positive view on the Australian banking sector, as it allows you to own all of the banks with a single trade. So pretty much all the big banks, all the smaller banks are listed on the ASX you can own. Australian banks are among the most highly regarded in the world. The four pillars, which are Commonwealth, ANZ, Westpac and NAB, are ranked within the top 50 most valuable banking brands in the world by Brand Finance Banking 500. And they are also ranked in the top 50 safest banks by Global Finance. So Australian banks are highly regarded for more than one reason. So stick around, guys. This might be of interest, might be able to add some value to your day and your investment journey. Hey there, investor. This is Scott. Crack the Sky Value Investing will be giving you up-to-date investing news and content so that you can navigate the markets wherever you are. My mission here at Crack the Sky is to give you the knowledge and the confidence to take control of your personal finances, expand your investment horizons, and crack your financial sky. So don't be afraid to give me a thumbs up and also subscribe. It helps get the message out there. It helps pump the algorithm for YouTube. Just in general, it sort of gives me a bit more motivation as well to keep doing these little reviews for you guys. Thanks. Okay, so let's dive on in and have a quick look. So MVB gives investors exposure to a diversified portfolio of ASX-listed securities with the aim to provide returns before fees and other costs which track the performance of the index. Quick note about the index. The index is the MBIS Australian Banks Index, which is a pure play rules-based Australian sector index that combines benchmark with blue chip characteristics by tracking the performance of the largest and most liquid ASX listed companies that generate at least 50% of their revenue or assets from Australian banking sector. This one is full replication of the index. Why would we bother looking at this one? Diversified across Australian banks. Invest in all the banks and remove a single bank risk with one trade on the ASX. So if you like the sector but you're not sure which bank's going to perform the best, you don't really need to do that research. You can just buy the whole banking sector in one trade and get the average by owning this ETF. As I kind of touched on, it's tactical exposure, so targeted investment position to one of the pillars of the Australian economy, which is banking. Tax effective income, so Australian banks have typically paid high franked income relative to other sectors, so we're always looking for income which can help us on our investment and life journey. Okay, at the time of completing the research, we had a net asset value of $28.72, trading just below that at $28.41. If I was in the market for this ETF, I'd be looking at it now because it looks like it's trading at a discount to the net asset value. So that means you're buying the assets for much cheaper than what they actually are really valued at. So the net asset value is higher than the price to buy the ETF. Market cap of $151,300,000. Management costs is pretty low, which it should be, 0.28%. You get a distribution 3 times a year, July, August and December. Dividend yield is quite low at 1.59%. So the ETF currently holds 7 companies in the portfolio. Top 5 account for 96.55% of the holdings. I'm waiting and watching the dividend situation with the banks subsequent to COVID. At the moment anyway, with any luck, that they should increase their payout or they increase their dividend, and that might actually mean that an ETF like this is actually worth investing in. Banking has changed quite a lot over the last sort of 4 to 5 years. These banks have pretty much sold off a lot of their other investment arms, or private investment type vehicles, and they're kind of just focus on more on housing and lending money, bank accounts, that sort of stuff. So they kind of remind me more of building societies, I suppose. So they've got a much simpler business model than they had 10, 15 years ago. MVB can deliver some growth and yield with the Australian banks by passing all the dividends and franking credits to the investor. As always, we should be doing our research, so have a look at QFN before we do any further, before we consider buying or whatever. We always need to do our research. Okay, looking at a total return since inception, which was on the 14th of October 2013 of 6.77% per annum, which isn't terrible, but it isn't great overall. The average share price return of Australian Big Four banks over the last 5 years, up until December 2020, hasn't been great. Not one of the Big Four Aussie banks delivered a positive share price return between the 1st of January 2016 to December 31, 2020. So if you held all 4 of the banks in equal proportions, which is kind of effectively what you're getting with this ETF, or thereabouts anyway. So if you held all 4 of the banks in equal proportions, your returns would have been minus 22% or thereabouts. So it's definitely something to look back on. But if you had actually bought the ETF at the end of March last year, you'd definitely be happy with your decision, because you're probably looking at 50% up in the last 12 months or thereabouts. So, as we always need to understand, investments of any type always carry risk, so make sure we're doing our research and getting further advice when needed. Would I bother buying this one at this particular time? No. Say dividends are off quite significantly over the last 12 to 18 months. Definitely something to keep an eye on. If they were to return back to normal levels, you might consider it, but right now I'd say this one is a no. Are you interested in learning more about personal finance and investing in the markets? If you are, then smash the like here on the left hand side and caress the subscribe button on the right hand side. It's KrackTheSky Value Investing. We'll be giving you up-to-date investing news and content so you can navigate the markets wherever you are. Expand your investment horizon and crack your financial sky. Thanks guys. See you later.